Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you'd like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at US dollar against the Indian rupee. For a second consecutive year, I am back to using weekly charts here, as the monthly ones still lack much definition. The most significant feature seen here, and one that has led to the development of other significant features, was highlighted right at the end of last year and in my previous annual review. It was the break and close below the lower time, currently at 76.61, of the January 2018 to July 2019 bullish shift pitchfork. It was soon countered in late February with a combined weekly key reversal up and bullish engulfing pattern, and then again more thoroughly in April, but the damage had been done, and the next time the market went below the broken lower time, it stayed below. However, that was not the whole story for this lower time. Since then, it has started to act much as an upper channel line, with the lower bull channel initially being the rising medium moving average, currently at 72.82. Then more recently, the reassigned 2011 to date uptrend, currently at 73.85. And most recently, it seems the 2-year moving average, currently at 74.04, has started to support the market, along with another pattern line, one that I will now go into more fully. You see, another of the features that have developed is a possible diamond pattern over the August 2020 to date period. Now, don't get me wrong, I am the first to say that this diamond is a lopsided, highly optimized one, but it still exists. And I feel more uncomfortable denying it than recognizing it with all its many faults. In early October, the market broke out of the top side of the diamond through the 2-pointer downtrend trend line, currently at 74.08, and tried to move back into it within a few weeks. But despite repenetrating it, only managed to make one weekly close back within it. Since then, the seeming bull channel, currently at 73.84 to 76.61, seems to have taken over. Nevertheless, I'll give a potential target on the top side for the diamond pattern just in case. Target X is in the 77.14 area. However, there is one other pattern I'd like to discuss, and it is an even larger one than the heavily optimized diamond pattern. It is still not complete, but it is to look at the action since mid-February 2020 as a possible big M pattern. Now, big M patterns, like their opposite, the big W pattern, are a derivation of the double top pattern, but obviously over a longer period of time. In the case of this pattern, we could see a move up to the highs of 2020 in the 77 even area, even a move up to target X in the 77.14 area, before a fairly swift fall back. Not dissimilar to the rise seen back in February 2020, but obviously heading lower. It is still too early to say if we have a big M pattern, but the idea should be out there, being considered. Why should you consider this idea? Well, it is because the move it would subsequently initiate would be far larger than anything the possible diamond pattern could initiate. That is why.